Good evening everyone, this is Srikanth Rajan and welcome back to Market Pulse video where we discuss about what happened last week in the stock market and what could be expected for the next week. So of course, to start off with, we should speak about the first thing on Monday, last Monday, that was the big gap up opening, and the good thing was the gap up opening did sustain. In fact, throughout the day it was a flat day from the gap up opening, but then the market did sustain and we could see a big positivity in the market. From there, on Tuesday, that move continued. Wednesday, it was a flat day till afternoon, and afternoon there was a big breakout towards the higher side, breaking that major resistance on the higher side, and we could see market going up above 17,700. The interesting thing was on Thursday, on the expiry day, the market opened up and went up again, touching a recent high, swing high of 18,777, and from there started the fall. So there was a big fall on Thursday on the expiry day. On Friday, again a fall. So overall the market, which was bullish on the first half of the week, went on to a negative bearish ending at the end of the week. So if you look at the weekly charts, it's actually showing like a trend reversal. But then is it confirmed is something that we'll have to wait and watch. So the way the markets are turning back around, so it looks like the markets are going to see some temporary bearishness, but then the weekend after the Indian markets closed, the US markets have actually opened and closed in the green, which has given a slight positivity to SGX Nifty, which is kind of indicating a positive gap up opening tomorrow. Now, the big question is, will this sustain? Because, there are a few very important data coming up this week, starting off with, of course, the CPI data. So, of course, I'll talk about the next week a little later. Let me come back to what happened this week. So, if you see this week, the major positivity was actually, again, provided by the auto sector. So, auto sector was doing good in India. IT sector continued to drag in spite of the news that LIC has been investing consistently into TechM for the last few months. In fact, last 6 months data which came out recently said that LIC has been investing consistently into Tech Mahindra. So that actually sounded good. In fact, the way the market actually opened up, in fact, the IT sector has been consolidating for a long time, and Tech Mahindra as such has been in a consolidation mode for a really long time. So even I have some holding there, so which I'm just waiting for it to kind of move up. So that is something that was expected, but then the global weakness in the tech sector, I would say, has actually kept the Indian IT stocks in the way. So naturally, IT stocks have not been doing well. In fact, on Friday also we could see Infosys falling big. So Thursday and Friday, there were again IT sector which let down from the market. In fact, the next important thing was looking at Bank Nifty. So Bank Nifty also was on a rally for quite some time. In fact, it was looking like it would break out, but then that did not happen, again thanks to HDFC Twins, which actually led the Bank Nifty down. On Friday, we could see SBI also falling down big. Majorly, I think it's more like a profit booking kicking in, not anything related to fundamentals. Of course, HDFC has the fundamental issue, that is people are still waiting for the completion of the merger of HDFC Bank and HDFC. But then SBI in falling so much, there was no reason. However, looks like market is still cautious. Next week we have the FOMC meeting, which is again I go on to next week. So let me hold the next week part. Okay. So this week, so this is what happened with TechM. Apart from that, major news was the IEX falling. So IEX hit the lowest acute and then continued to fall. So that was majorly reason was of course because of this change in government law. In fact, IEX had its monopoly business, wherein it was acting as an energy exchange, where it was almost the deciding authority for the prices of. So what does the energy exchange do? So there are buyers and sellers for energy, and they actually match up the prices and execute the trade. So that was a monopoly for them, for India, and that was expected to do actually well. But unfortunately now Indian government has said that they are not going to stick up with just one exchange, and they're going to have a super exchange above IEX, which actually spoils the entire business model for IEX. So that is something which was negative, I felt, and that's exactly why I exited IEX with a small loss, though it was in my portfolio. At times like this, when there's an internal factor affecting the stock, I always have exited out of it. Not to, not, I'm not telling that it may not recover at all, but then it is very difficult for it to recover. And I don't want to take that risk with my money there. So it's something like this that I think I've discussed earlier also. So like in Mumbai, you see all the fast train and the slow train. So if you want to go to a farther distance, you should prefer actually getting down from the slow train and getting into a faster train. So IEX was probably the slow train for me right now. So I would prefer to take the money out and put it into a faster train. It's probably take my portfolio at the longer perspective, or probably until IEX see some special ray of hope. So that's simple as that. So that's how I exited out of it. Apart from that, if you see, the IT stocks are still looking good. In fact, with this fall that happened on Thursday and Friday, now I'm not telling whether markets are going to go up from here or go down from here, because that can never be predicted by anyone. But then, of course, if anybody of us have actually missed that opportunity of entering the market, this could be an opportunity to enter the market. And from here, if it goes down, very good, you can add some more funds. But if it goes up, again, you'll be happy that you actually invested. So stock markets are like this. It goes up one day, down one day, but then it is the consistency in staying there and being invested which actually builds amazing returns. In fact, if you look at this financial year, personally, I'm sitting with the amazing return already in my portfolio. May that be the stocks or even my trading. So both these accounts are doing really well. I'm sure, yes, Pro Shivana is online. So I'm sure your portfolio is also looking great, isn't it? Or similarly, our other members also are sitting with a good portfolio if they have maintained a similar portfolio as what we do. Well, I'm not a CB listed analyst, but then of course I discuss all this for the passion that I have towards investing in stocks and every other financial instrument. So apart from that, if you look at the markets last week, there was the RBI monetary policy which actually went unharmed. In fact, during the market hours, it was kind of pulling the bank nifty up and up. In fact, our bank nifty hit a high, but then just after the meeting was over, we could see the market actually falling down. So naturally, they kept the rates unchanged, and that was expected. So there was no big move from RBI, I would say, but it was just more of a profit booking which is kicking in. That's something which I believe. So at this point of time, the FIAs have not been a big seller till date. Neither the DIIs. They have been booking partial profits at times, but then it is not a big selling that needs to be talked about. So the way things are going, looks like institutions are still confident on the market, and that can actually lead to further rally in the market. But then, like I always say, it is not a straight linear growth in stock market, but always the fluctuations of high and low, which gradually takes the market up. So at least with my belief, I am expecting the markets, especially the Indian stock market, to kind of do really well in the next 2-3 years. And of course, that's exactly why I am invested the way I am already invested in. So that's something I wanted to share on part of last week. Now coming to this next week ahead. So we are starting this week with very important data, that is India's CPI on Monday. So Consumer Price Index, for people who don't know, it is the inflation data for India. So that is coming up on Monday. Probably that would come after market hours on Monday. And however, I don't think it's something that we need to bother about, because last month also, it was down, and this month also expectation to be down. In fact, last month the wholesale price index was actually lower, so that actually would definitely mean that inflation data is going to be very decent. It would probably turn out to be a non-event. Then what we need to focus on is actually the WPI, the wholesale price inflation data, which is coming up on Tuesday. So that should be in focus. And next important is the US CPI data. So that is also coming up on Tuesday. So that would come only after Indian markets close on Tuesday. And along with that, but that is again going to be non-event, because US CPI is also expected to be lower. So that should be fine. But what would be in focus is Wednesday. Yes. Two very important events that both happening in the US. That is, first one is we have the US Federal Reserve monetary policy meeting, and the details, they would be sharing the details on the view on the interest rate hikes. So the market is expecting no more rate hikes in the US right at this point of time. So definitely US markets would be cautious until Wednesday. Now, whatever decision comes out on Wednesday, and what kind of confirmation or speech they give after the meeting is something very important. If any hawkish comments come, there are chances the markets can fall further. And the way the US market has been going, in fact, at this point of time, they are close to its 2023 year high, all the index. I probably feel we might have a flat to a hawkish comment coming in on Wednesday. If that happened, there are chances the US markets can actually kind of slightly correct itself. So my US market is going to be jittery this week, and that is exactly going to be seen in India as well. So that is something to be on major focus. So Wednesday, the effect of that would be seen on Thursday. So this week's expiry is going to be slightly tighter. Let's see how we manage it. In fact, last few weeks we've been managing our expiry trades amazingly well. Even this week, the last Thursday expiry was a thriller expiry. I'm sure members here must, of course, those who are trading in the Gold Club with us would have experienced that it was a thrilling expiry. But then we came out with a very decent profit of more than 1% this week also. So things have been going good for this financial year. Really happy about it. But then, of course, we can never time the market. But then, if at all, I would be looking at reducing my position slightly on Wednesday. But then, of course, would be entering a trade, and in fact, I'm already in a trade for the next week, so expecting it to do decently well. So that's it for now. I think I've covered it all. So for members, those who are not a part of MPI community, if you need support with the investments, of course, MPI Invest is official franchisee of Kotak Securities, Motilal Oswal, and not only that, we are kind of with every insurance company and mutual funds in India. So not only that, FD or bonds, we're there completely for your support. But then we do all this only after a complete understanding of your financial goals and then deciding a proper financial plan for you. So if you want to do that for you, all you need to do is go to our website, mpiinvest.com, which is mentioned in the scroll here, and schedule an appointment with us, and we will have a completely free session with you to understand your needs and how we can help you to achieve your financial goals. So that's it for now. This is Srikanth Rajan signing off. Looking forward to a great week ahead. Wishing you all a great week ahead. Goodbye. Have a great day. But before we leave, do remember to press the like button if you love the content that we share, and do share the podcast with your friends and relatives to help them learn and invest together with us. See you again tomorrow morning with our regular podcast. And for members who are investing, you can catch up with all details of the market in a short time on this Market Pulse video that comes every Sunday at 7 p.m. right here. Goodbye.